the management of Texmaco Rail Engineering. We have with us Indrajit Mookerjee, the ED and Vice Chairman of the company, joining in on the show right now to talk about the business, about the sector, etc. as well. Mr. Mookerjee, great to have you today on ED Now. Now, you're looking to consider raising funds, as we understand recently. Reports are suggesting that you're looking to raise about 500 crore rupees via QIP. Help us understand, A, what's the sum that you're looking at raising, and what kind of investors are you looking to get on board, and what is the objective really behind the fundraise?
By and large, I think we are looking at slightly more than 500 crores. So we are looking around 750 crores of fund to be raised. The second question that you had was why? This is a combination of, as you know, our production is getting ramped up at a very high speed, at a very high rate. We already have achieved almost 250% jump from what we used to do last year. And now I expect that this is going to be going up by another 75-80%. So, I mean, totally we would be around 400% jump that we are expecting in terms of both production of our freight cars, that's the railway wagons, as well as, backward integration plants like the foundry. So as a result of this, we need more working capital. We need some balancing capital equipment to support that. And last but not the least, we also would like to retire some of our debts because the debt level has gone up. So that's the object of the fundraising.
Thank you so much for highlighting that so candidly. I also wanted to talk about, this multinational rail deal linking India and the Middle Eastern countries and EU, which got announced at the G20 summit. Tell me, what kind of opportunities do you think it could bring for you at Texmaco?
I think it's opening up an endless opportunity. If you would really have studied the announcement that has been done. In fact, this has been brewing since 2021 in the G7 meeting when the US president had suggested a similar kind of an action, more or less in the way the China have done their BRI, the border roads. So he's doing their BRI. This connects, as you know, a whole part of the Middle East it starts from Dubai, and Mumbai to Dubai can be a ship channel, which is a short one, and then it cuts across the entire Middle East up to Israel in Haifa, and then it takes off from the Haifa port to European countries. So for us, we are represented in all the segments. Those are required, or those will be required for this stretch. We make rail freight cars of various types, and we are one of the companies who are making a global standard. We are laying railway track through our EPC company. We have done the dedicated freight corridors in India, so we are highly experienced. We also do signaling. I must correct that we have not done the entire track laying of dedicated freight corridors, but we have done the entire signaling there. But we do freight car, the track laying elsewhere we have done. We are in the overhead electrification. So all that's required as the ingredients to connect from one part of Middle East, which is from Dubai or from Jebel Ali to Haifa. And we feel that we have a strong competencies, presence to be playing there.
I just wanted to understand from you about the overall competitive intensity, because that also is quite high. So how confident are you about getting these orders without actually compromising on your profitability?
It's too early to say, but because we really don't know how it's going to pan out. But the opportunity is going to be very large for everyone in the global companies to play, because if you really look at the distance and the type of work that is required to be done, it's going to be a huge investment. So I don't think that's going to be a major issue. I think it's the issue of how we manage ourselves to do that. And that's what we have already started thinking about and looking at it, making our tactical plan, our strategies for the same.
Okay. What is your current order backlog and what kind of revenue visibility do you have? Are there any significant orders that are in the pipeline? Can you share with us the breakup of the execution over FY24 and 25?
Well, we are sitting right now on an order book of something like about 7,000 crores, 7 to 8,000 crores in that range, and that's a lot. And orders are the market is very buoyant, as you know, and we keep on getting orders almost every month. So that's the order book position, and that's the reason why we are ramping up production. That's the reason why we are adding on to capacity, and that's the ultimate reason why we are going on for some fundraising.
Fair enough. So, what about your focus in terms of orders from private players? Can you walk us through the share that you have from your private projects? And what is the margin differential between government versus private?
See, it's a difficult question because I think I should be restrained in giving any forward-looking statement. But I think we are looking at the sales turnover to go up by a substantial percentage from what we have done last year, and we see a continuous trend of growth for the next 3 to 4 years, for which we have a visibility because we have the orders. As regards the private players are concerned, we are doing a lot of private orders. In fact, the private orders could be somewhere around 20% of the total railway purchase. I mean, 20% of the total purchase of railway wagons, and we have a very substantial share there. We have a very substantial share with the major players. In addition to that, you must be aware that we also have a joint venture with a French leasing company. So that also another private player where we normally our preferred vendor will be Texmaco. So we are very strong in the private segment.
What are your plans to diversify into the non-wagon segment and the non-railway segment? How is that coming along?
We have found that tremendous business opportunities in terms of in the component business. When I say component, I would mean that there are lots of components which are required for building a wagon. So we have positioned ourselves as a company with high technology, where we have access to technology we have developed in-house, or also we are also looking at outside for the global technology. So before we move to other segments which we have our eyes on, but that's a very competitive segment. Before we move into the other segments, we want to be excelling, and we want to be the best performing in the freight cars as well as the freight car components. And this is not restricted to India, because there is a global shortage of components. You must be, I don't know whether you're aware that we already have a joint venture with an uh, European company, which is the second largest European wagon manufacturing company. And that one of the purposes of that joint venture is to supply them components from India, from Indian manufacturing base. Of course, that joint venture also will be making wagons, so our capacities will further go up. So that's a major focus for us now, the wagon components. We are looking at also the passenger mobility, but we want to be very selective there, because we don't want to take too much risk. We want to be making money there. So that's also very much under active scanner.
You also produce around 500 wagons per month, right? Will this then cross, say, 7 to 800 wagons by the end of the year as you up your capacity?
Yeah, if our plan goes well, we should be hitting that number next month. We should be doing the same number, 750 next month. I think this month we did about 550 wagons, and it's steadily going up. It's a segment which has got a lot of challenges because there are lots of uncertainties in the whole process. Material supply, the ecosystem hasn't developed to that extent. But I think we are getting over that. That's history now.
Yeah. So how much, or rather, what is the quantum of wagons that we're looking at by the end of the year, considering you're already going to clock
I
700 plus by the next month?
we would be able to touch 800 wagons without by the end of the year. I'm talking of per month rate, and we have a mission to go 1K, which is 1,000 in the coming financial year.
Okay. I'm sure you'll clock that as well. But you were also looking to demerge the rail EPC division, right? Where significant funds are blocked in slow-moving receivables, as we understand. What's the status on that?
We have applied we have started the procedure for demerging the EPC business, which we call the Kalindi part of the business, because that's a company which we acquired sometime in 2013-14. The reason for doing it is very simple, because we have rediscovered our core competencies in the manufacturing, and EPC requires a different management bandwidth, and we felt that would be best done if we put it as a separate, we demerge as a separate company and then try and build up. But now the story that we just now discussed a little while ago about the India, Middle East, European mega economic corridor that's has been announced, that's going to change a lot of the fortune of the EPC companies, and Kalindi will be definitely one of them, will play a very major role. That's the way we look at it.
Time. Good to have you on board. That's the word coming in from the management of Texmaco, a 750 crore fundraise. They are looking at an upward trend in the sales for the next 3 to 4 years and are also looking at tremendous opportunities in the component segment. Let's slip into a very short break, get you lots more news and updates when we return.